Yes, a very good evening to all of you. Right, so how was your day? What all did you study today? Right, how many hours did you study? Right, what all did you study regarding audit since the time we are doing the class since day before? Right, how much of audit have you covered or how much time are you giving to the subject? Yes. Did you look into what we've already seen yesterday? Like we saw SA 550 related parties, then 600, 610, 620, and then using the work of another auditor, using the work of internal auditor, and then using the work of the auditor's expert. Right, so FR only, okay, right? So because the exams first paper, right? So okay, very good. Road audit mock test. Oh, so today's day has been special for audit over there. Okay, right. So, anyways, right now we started with FR today. Okay, so today you started with FR, right? So just yes, few hours. Now you can start counting the hours also. There is the time when you count months before the exam. First, when you clear inter, you count, years before the exam, then months before the exam, then weeks before the exam, then days before the exam, and now you count the hours before the exam. So, and then same thing will happen. You'll wait for the result for months, for weeks, and then for day, and then for hour, and for a minute or so. Okay, right? So, anyways, that's the experience of becoming a chartered accountant, or that is the work in progress. That is the processing which happens is required to be done in order to become a chartered accountant. Okay, right. So, anyways, as planned for today, we will first start with our discussion regarding the peer review, because the chapter heavily it is getting revised time and again, time and again. Originally, they said that peer review it should be completed within 90 days. Then 90 days they got it down to 60 days, and now though they are saying peer review to be completed within 20 days. For everything, 2 days only given over there, right? Only on-site working is on-site review is to be completed within these 6 days. And there is a concept of a new unit over there, right? There is the concept of the branch peer review and also the peer review of a new unit or so, right? So we look into the peer review chapter pretty exhaustively. Then after that, we look into the NBFC, the categorization of the NBFC, the base layer, the middle layer, the upper layer, and the top layer. And then after that, we get into our discussions of the MTP. Yes, the series 2. Yesterday, we saw the series 1. And then after that, we also look into the suggested number 22. And also, if time permits us, we'll try to consolidate and remember all the clauses of CARO as well as the ethics. Okay, right? So that's going to be our agenda. All set? Seat belt tightened, right? So let's begin with our discussion regarding the peer review, right? So this is what the document I have opened over here is your RTP May 23, which talks about okay, what are the amendments in the chapter of the peer review, right? So one, what does it say? The term technical, ethical, and professional standards, right? So technical, ethical. What is the objective of the peer review? What is the scope of the peer review? One, in order to ensure the compliance with the, right, to ensure that the practice unit, yes, the practice unit, the CA firm where the peer review is conducted is called as the practice unit, whether the practice unit complies with the technical, ethical, and professional standards, right? All the auditing, accounting standards, right? All the guidance notes, all the IND-AS which have been issued, the framework pronouncements which have been issued, right? So complies with the technical, ethical, and professional standards, and the reports issued by the practice unit, because that's the ultimate deliverable of the firm. So whether the reports issued, are they appropriate in these circumstances, right? Whether the reports issued, the quality of the assurance services, right? So the reports issued, are they appropriate? So for that, you need to check the quality of the assurance services. So non-assurance services are not included in the peer review. Only the assurance services are included in the peer review, right? So check compliance with the technical, ethical, professional standards and the quality of the assurance services, right? So here when we talk about the technical, ethical, and the professional standards, it says technical, ethical, professional standards will include, what does it say? Technical, ethical, professional standards, TEP, what we had originally, as applicable, including the AQMM. What is AQMM? The audit quality maturity model, right? So technical, ethical, professional standards will also include the audit quality maturity model wherever applicable, or any other regulatory requirement as may be prescribed by the council or by any committee, right? That is the part regarding what is added in the definition of the technical, ethical, and the professional standards, right? What is added over there? The audit quality maturity model, right? Just as you get the credit rating, the CRISIL rating, and different, credit rating agencies, they give the credit rating. Similarly, how good your firm is doing the audit, or how good it is at doing the assurance services or so. It says ICAR has set up an audit quality maturity model, and based on how these services are provided, accordingly a rating will be provided to the CA firm, right? So that is what this audit quality maturity model is about. So it says when the practice reviewer is going to the practice unit for the purpose of doing the peer review, he needs to check the compliance with the requirement of the audit quality maturity model. Okay, so is that also included in the technical, ethical, professional standards? Yes. Right. Then after that, it says reviewer means a person who's empaneled by the board fulfilling the qualifications. Okay. Branch peer reviewer, right? So earlier we only had one fellow called as the peer reviewer, but now we have somebody called as the branch peer reviewer, obviously who is conducting the peer review of a branch of the practice unit, right? So particular branch of the practice unit. Then a new definition inserted over there called as the new unit, right? What we've always been knowing is regarding the practice unit, but it says this practice unit, it could be a new unit. When you say that the practice unit is a new unit, one, it says it has not been 12 months since the date of establishment of the practice unit, or it has been more than 12 months, but they have not done any assurance services so far. Right. So what does it say? Immediately preceding the date of application may or may not have rendered any assurance services is less than 12 months immediately. Right. So it's not older than 12 months, that particular practice unit. And second one, what does it say? It is exceeding the 12 months, but not rendering any assurance services. Right. So less than 12 months since the creation of the firm, establishment of the firm, or more than 12 months, but they have not yet provided any assurance services. Right. They've not yet provided any assurance services. Okay. Right. Is there any chance to increase the volume? It is moderate. Okay. So you want me to increase the volume. So let me just try in OBS if I can make any changes over there. Okay, so maybe you can let me know now if the voice is better. Okay, right. So branch of the practice unit. Yes, rest everyone. Okay, please keep the session mix of Hindi and English. अरे मैं क्या करूँ? मैं चाहती हूँ कि मैं हिंदी इंग्लिश मिक्स बोलूँ, पर मैं जैसे बोलना शुरू करती हूँ तो साउथ इंडिया के स्टूडेंट्स बोलते हैं मैम इंग्लिश ओनली, मैम इंग्लिश ओनली. तो कैसे करने का अभी? ठीक है, अभी तो पीयर रिव्यू डिस्कस करते हैं, बाकी सब बाद में देखा जाएगा. ठीक है. Right. Then you have the peer review board, the board constituted by the council. Okay. Then the scope of peer review, right? So what is included in the scope of peer review? So again, quality of assurance services and to check compliance with the technical, ethical, and professional standards. And also what is now added in the scope of the peer review is the self-evaluation under the audit quality maturity model or any other guideline issued by the Center for the Audit Quality, right? So again, what is added in the scope of peer review in the technical, ethical, professional standards? The audit quality maturity model. What is added in the scope of the peer review is again the self-evaluation of the audit quality maturity model, right? So if you see this term somewhere in your MCQ or something, don't think that it is out of syllabus. It is very much in your syllabus. Right? So what does it say? What is included? When the reviewer is coming to the practice unit for the purpose of doing the peer review, he's also going to check that how they are doing the self-evaluation of the audit quality maturity model. Okay, right. Then technical, ethical, professional standards. It says it includes any other technical, ethical, professional standards and the other standards issued by any authority governing the profession of the chartered accountancy. Right? So any standards governing the profession of the chartered accountancy. So say NAFRA, it has issued some standards for the profession of chartered accountancy. So even those will be included. Okay, right. Then assurance services, right? What is to be included? Not included in the services of the assurance engagement, right? We say compiling financial information, compiling other than financial information, preparation of tax return, then giving the what do you say, representing before the taxation authorities. Then after that, engage the management services, the due diligence services, right? What does it say? This is not included in the assurance services, right? This is not included in the assurance services. Also, what is not included? So 8 points already given. Now, what is the 9th point over there? Any other service or function as performed by the practitioner, not prescribed by the council to be an assurance engagement. So anything which is defined, this is not an assurance engagement, it says that that will also be excluded from the scope of the peer review, right? So anything which has been defined, it is not a assurance engagement, it will be excluded. Okay, right. Then earlier practice units were classified as level 1 and level 2. And if you're doing audit of so and so, then you're level 1. If you're doing audit of so and so entity, then you're level 2 unit. Now what does it say? The peer review have been classified on the following basis: mandatory, voluntary, and the special case, right? So mandatory, where peer review is mandated for such practice unit as may be decided by the council. Voluntary, suo motu, may apply to the peer review board for the conduct of the peer review. And special case, what does it say? The board, based on the specific information received from the secretary, ICAI, or the disciplinary directorate, or any other regulator, which in the opinion of the board requires a special peer review of the practice unit, may conduct a special peer review of the practice unit for such period as determined by the board, right? So now what is the applicability of the peer review? It could be a practice unit, could be one which is falling under the mandatory peer review required to be done, or voluntarily they can get a peer review done, or a special case peer review because of the information received by the board from the secretary, ICI, disciplinary directorate, or any other regulator. Okay, right. Now mandatory. In mandatory, what does it say? They have the phase 1, the phase 2, and the phase 3 over there. For yes, phase 3 and the phase 4 over there for the mandatory peer review, right? So one, it says mandatory, second it says voluntary. Then when is it mandatory from? It is mandatory from 1st April 2022, then 1st April 2023, 24, and 25. Right, so mandatory first, right? Then you have the second, right? Then the third phase and the fourth phase, right? For the first phase, it is mandatory from the 1st April 2022. Second phase mandatory from 1st April 2023. Third from 24, and fourth one is from 1st April 2025. Okay, when is it mandatory that your CA firm, your practice unit, has to get a peer review done? Compulsorily, mandatory, if you are doing the audit of a listed entity in or outside India, equity or debt securities have been listed. For these practice units, there is a prerequisite of having a peer review certificate. I'd also mentioned the other day that without holding a peer review certificate, if you do this or if you sign the audit report of a listed entity, you will be guilty of professional misconduct under clause 9 part 1 of the second schedule. What is that? Fails to invite attention to material departure from the generally accepted audit procedures applicable to these circumstances, right? So fails to invite the attention. So if you are doing the audit of a listed entity, 1st April 22 itself, peer review mandatory, right? Then if you are doing the audit of the unlisted public companies having paid up share capital of more than or equal to 500 crore, or having the turnover of more than or equal to 1000 crore, or having in the aggregate the loan debenture deposit of more than or equal to 500 crore, right? So this is similar to the applicability of the NFRA, the National Financial Reporting Authority, right? Then what does it say? Or your practice unit is a firm having more than 5 or more partners, then the peer review, it says, will be mandatory with effect from 1st April 2023. Then if your practice unit is doing the statutory audit of any entity which has raised funds from whom? From the public or the bank or the financial institution of more than 50 crore during the period under the review, or what does it say? Any body corporate which is covered under the public interest entities, again it says mandatory for them to get a peer review done with effect from 1st April 2024, or if the firm is having 4 or more partners. And last one, what does it say? Practice unit which undertakes the audit of the branches of the public sector banks, then the peer review will be mandatory with effect from the 1st April 2025, or if your firm is having 3 or more partners, right? Or if the firm is having 3 or more partners, right? So that is regarding the applicability of the peer review. Certainly a question expected in your exams for this one, right? So what does it say? With effect from 1st April 23, there is a prerequisite for getting a peer review certificate. If you're doing the audit of these entities, 500,000 or the 500, right? Which is also similar to the applicability of the NAFRA. Okay, right. If they already have the peer review certificate, then no need to get it once again. Okay, right. Then we come to the peer review board, the constitution of the peer review board. What do we study in the constitution of the peer review board? That maximum 12 members. But now what they've also mentioned over there, minimum 6 members. Right, so minimum 6 members, maximum 12 members. Earlier, what was given was only maximum 12 members. Now, what they've also mentioned over there is the minimum 6 members and maximum 12 members, and at least 50% should be the council members. Okay, right. Then eligibility to be a reviewer. You are saying, no, no, ma'am, I want to become a reviewer. I want to go to different firms. Right, so my voice is not audible. Yes, is it? Let me see. I don't know, because same settings like yesterday, but sometimes don't know what's the reason. Is it any better now, my voice? I think I need to speak more loudly. Okay, right? Is it better now? Yes, all of you, those who are listening to me, obviously. And some other day I would have conducted the session, they would not have listened to me carefully, but today they listen carefully. Anyways, I want your successful results. That's it. Okay, right. So eligibility to be a reviewer. What does it say? Eligibility to be a reviewer. You should have 7 years of audit experience. Now that 7 years of audit experience has been changed to 7 years of assurance practice experience. So that is the change over there. Right. Then what does it say? Last paragraph, a declaration of confidentiality shall be signed by all the members of the peer review board and also the board secretariat. So earlier the declaration of confidentiality was only required to be given by the reviewer, but now it is also required to be given by the peer review board and also the board secretariat. Okay, right. And now coming to the peer review process, right? Now coming to the peer review process. Okay, so how does it start? One, your firm could be a entity, your practice unit could be an entity which mandatorily requires a peer review to be done, or which is, voluntarily they want a peer review to be done. Okay, so now if voluntarily they want a peer review to be done, or on their own they know, okay, oh, I need a peer review certificate, so peer review board should send somebody to my firm to do the review. It says in that case the practice unit will submit the application cum questionnaire, right, to the peer review board, right? The practice unit will submit an application for the peer review in the application cum questionnaire form and questionnaire in the form 1. Right. If the intimation is received from the peer review board, right? So peer review board is saying that we want to get a peer review of your firm done. Then in that case also the practice unit, what it needs to do, it needs to submit the practice, yes, the application cum questionnaire in the form 1 to be submitted by the practice unit on the request of the peer review board secretary. Right. So one, the practice unit on its own can submit the form 1 to the peer review board, or second, the intimation is received from the peer review board and then the practice unit submits the form 1 to the peer review board. Are you understanding that? So once, what is step 1? Practice unit has to submit the application cum questionnaire in the form 1 to the peer review board. Once the peer review board receives the application cum questionnaire in the form 1 from the practice unit, now the peer review board has to give to the practice unit a choice of 3 reviewers within 3 working days. So that much they have done good over there. And the name of 3 reviewers within the 3 working days, right? So here it is 3 and 3. And three reviewers within 3 working days. So once the application is received by the peer review board, then what does it say? The recommendation of the 3 reviewers has to be given by the peer review board to the practice unit within 3 working days. Then once the recommendation of 3 reviewers is received by the practice unit, the practice unit needs to select 1 reviewer within 1 working day. They are very good people. And select 1 reviewer, select any one out of the 3 recommended reviewers within 1 working day. Right? So 3, 3, then 1, 1. Okay. Then after that, what does it say? They said that, peer review board gave recommendation that A, B, C. These are the 3 options of the reviewers you have. Out of that, the practice unit selected A. Right? So now reviewer A has been selected. So the board will appoint the peer reviewer selected by the practice unit in accordance with the guidelines. So they selected reviewer A. So now that reviewer will be appointed. Then the board will appoint the reviewer. The board will also intimate the reviewer so selected to submit a declaration of confidentiality in form 2. Right? So far we've seen form 1 and now we are seeing the form 2 to the practice unit within 2 working days. Right? So now what does it say? Within 2 working days, the board will intimate to the reviewer, and that the reviewer has to give a declaration of confidentiality in form 2 within 2 working days. Right? So form 2, and that is within the 2 working days. right? So 3 reviewers within 3 working days, 1 reviewer to be selected within 1 working day, then form 2 has to be submitted within the declaration of confidentiality has to be submitted within the 2 working days from the date of the receipt of choice of the name of the reviewer from the practice unit, right? Then what does it say? The practice unit, originally to whom it had given the application cum questionnaire, it had submitted the application cum questionnaire to the peer review board. Now they will send it also to the reviewer. The practice unit shall also provide a copy of the application cum questionnaire in the form 1 submitted to the board as per clause 6.1 or so above to the reviewer. So now that form 1, earlier you submitted it to the peer review board. Now you need to submit it to the reviewer. Now you need to submit it to the reviewer. Are you understanding that? Okay. Right. Then after the form 1 is being submitted to the reviewer, now the reviewer, before starting the peer review, has to again give the declaration of confidentiality to the practice unit. So before commencement of the peer review, the reviewer shall ensure that the declaration of confidentiality is furnished to the practice unit. So they say that whatever information you will give us regarding your quality control policies and procedures, your assurance services, will maintain the confidentiality, is furnished to the practice unit, and acknowledgement of receipt thereof is obtained by him. Okay, so now what has the reviewer received? The reviewer has received the form 1. Right, now what the reviewer has received from the practice unit, they have received the form 1. Now on receiving the application cum questionnaire in form 1 from the practice unit, the peer reviewer shall initiate the peer review by intimating the practice unit of the proposed unit visit. Right, so now the practice unit sent to the reviewer the form 1. Now what the reviewer will do, he will initiate the peer review process, right? Initiate the peer review by intimating the practice unit of the proposed visit and the proposed sample selected to be kept ready by the practice unit, and the proposed samples are to be selected in form 5. Right, so how these samples are to be, the whatever samples you select, how they are to be communicated, they are to be intimated by the peer reviewer in the form 5. Can the reviewer ask for additional further information? Yes, the reviewer may ask for further additional information in the form 6. Right, so after the application cum questionnaire in form 1 is received by the reviewer, then the reviewer will initiate the peer review process. Right, the proposed samples it has to intimate in the form 5. It can ask for additional information in the form 6. Okay, and then after that, what does it say? If the reviewer asks for the additional information has to be provided within the 1 working day. Then the reviewer, within 2 working days of receiving the information from the practice unit, select the assurance service engagement that he would like to review and intimate the same to the practice unit. So now they will select the samples, right? So 1, what does it say? Additional information to be given within 1 day. So practice unit is always getting only 1 day. And then the reviewer has to select the samples within the 2 days, right? The reviewer has to select the samples within 2 days and intimate the same to the practice unit and the peer review board. Now what they will do in the exam, they will make an MCQ on this one. Okay, the samples selected by the reviewer have been intimated by the peer reviewer to the practice unit, but not to the peer review board. Are they also required to be intimated to the peer review board? Yes, the selected assurance review service engagement. Right. Then after that, the reviewer will plan the on-site review. On-site review, what does it say? At least 2 days time before they come for the on-site review. Right? So samples are selected, then they are saying we are coming to do the on-site review. So far it has been the off-site review. But how much time before they go for the on-site review? At least 2 days time. Right? At least 2 working days to be kept, yes, to keep ready the necessary records of the selected assurance engagement. Okay. Now the reviewer and the practice unit shall mutually cooperate and ensure that the entire review process is completed within the 20 working days from the date of receipt of the application from the practice unit for being peer reviewed, or from the date of the notifying the practice unit. So the entire peer review process should be completed within the 20 working days. And in case if it's a peer review of a new unit, then the entire peer review process should be completed within the 7 working days. Right, so if it's a peer review of a existing unit, then that has to be completed within the 20 days. And if it's a peer review of a new unit, then what does it say? It has to be completed within the 7 working days. Okay, right. And now the on-site procedures, right? On-site procedures, what does it say? It should not exceed beyond the 6 working days. So once upon a time, it was 7 working days. Then they made it 7 to 15 working days. Then made it 7 working days. Now finally, it is saying that on-site review should not exceed beyond the 6 working days. days, right? So on-site, how many words are there? ONSITE. And on-site, 6 days, and 6 words, so 6 working days. So on-site review should not extend beyond the 6 working days. Okay. Then peer review of a new unit to be conducted based on the details of the partners and the announcements is announced by the practice unit or so. And on-site review should not exceed more than 1 day. Right, so what does it say? For an existing unit, total limit is 20 days and on-site review should not be more than 6 days. And for a new unit, the entire limit is 7 days and on-site review should not be more than 1 day. On-site review should not be more than the 1 day. For existing unit, the entire process should be completed within the 20 days and on-site review should not be more than the 6 days. And in case of the new unit, what does it say? The entire process should be completed within the 7 days and the on-site review should be completed within not more than 1 day. Okay, right? And then the reviewer will submit the report to the board in the format. Okay, then after the completion of the on-site review, so off-site review over, then on-site review, and then after the on-site review, now there are two possibilities: that the reviewer does not find any problem in the practice unit, or he finds that there is some problem with the systems and procedures at the practice unit, right? So if there is no problem in the systems and procedures at the practice unit, then what does it say? The reviewer shall submit the peer review report to the peer review board. Directly the report will go to the board in form 9 if in his opinion the practice unit has the adequate systems and procedures in compliance with the technical, ethical, professional standards and the audit quality maturity model. And a copy of the report will also be forwarded to the practice unit. So again, this is an MCQ. Okay, whether a copy of the report is to be forwarded to the practice unit also? Yes. You issue the peer review report to the peer review board when you find the systems and procedures to be adequate, when you find the systems and procedures to be adequate, but also a copy of the report you issue it to the practice unit. Also a copy of the report you issue it to the practice unit. Okay, and in case if the reviewer is of the opinion that the systems and procedures of the practice unit are deficient, right? So now systems and procedures are deficient or they are non-compliant with reference to any matter, then in that case the reviewer will issue the preliminary report to the practice unit, communicate his findings to the practice unit in a preliminary report issued by him. The practice unit within 2 working days, right? So now here the practice unit is getting 2 working days. Otherwise, everywhere it was getting only 1 working day. Right, so if there is no finding, then directly the final report to the peer review board. But in case if there are findings, then what does it say? The preliminary report is to be issued to the practice unit within the practice unit, and the practice unit has to give the response within the 2 working days. Then there are 2 possibilities. The reviewer is satisfied with the responses, the reviewer is not satisfied with the responses. If the reviewer is satisfied with the responses received from the practice unit, he will submit an unqualified peer review report to the board in form 9 and a copy of the report will again be forwarded to the practice unit. But say if the reviewer is not satisfied with the responses given by the practice unit, then the reviewer will submit a qualified report to the board incorporating the reasons for the same along with form 9 and a copy of the report will be forwarded to the practice unit. And the peer review report shall state the system of quality control for assurance services of the practice unit for the period under review. Yes, whether it has been designed to carry out the assurance services as per the technical, ethical, professional standards. So you have to comment upon the system of quality control, the SQC 1, standard on quality control 1. Okay, the peer reviewer shall ensure to submit the following documents along with the peer review report. Is this a candidate for a separate question in your exams? Yes. Okay, along with the peer review report, what documents are required to be annexed or required to be submitted by the peer reviewer, right? So one, the annexures to the report as prescribed by the board, then the copy of the questionnaire as received from the practice unit. Remember the form 1, so a copy of the questionnaire. Next one, the list of the samples which have been selected in accordance with the criteria and the preliminary report if any, right? So annexures to the report, then the copy of the questionnaire, list of sample and the preliminary report if issued along with the practice unit submission on the same. Right, so this could be a separate question in your exams. Then the practice unit as well as the reviewer shall ensure that all the documents are duly dated and signed, and so right mutually cooperate that it is completed within the 20 working days, and in case of a new unit it is completed within the 7 working days. Okay, and then the review of the report by the peer review secretariat. Right, so if the peer review report, the peer review board is satisfied with the peer review report, then they will issue the peer review certificate. They will issue the peer review certificate. However, where there is a qualified report, then in that case the board may decide for a follow-on review to be conducted after 1 year. However, that 1 year could be reduced to 6 months, but not less than 6 months. Right, so in case of unqualified opinion, like unqualified means that the clean report, unqualified peer review report, it says the peer review certificate will be issued. But in case of the qualified opinion, the board may decide for a follow-on review to be conducted after 6 months to 1 year. Right, to be conducted after 6 months to 1 year. And then what does it say? Unqualified report, they will place the matter before the peer review board, and then the peer review certificate will be issued. Then a peer review certificate shall be issued to the new unit subject to the procedures as in accordance with the guidelines. Certificate will be noted by the board at its meeting. It shall be signed by the chairperson, the vice chairperson, the secretary of the board. Right, then also the peer review certificate shall serve the peer review. Yes, the peer review board secretary will give the peer review certificate to the practice unit. Then the peer review board secretary shall update the list of the practice units having a valid peer review certificate. And in case of the qualified opinion, what does it say? An explanation that the peer review certificate cannot be issued, and in case if a follow-on review has been planned. Right, in case if a follow-on review has been planned. Okay, and then validity of the peer review certificate. The peer review certificate issued to a practice unit shall be valid for a period of 3 years or such other period as may be decided by the board commencing from the date of receipt of the peer review report by the board. Right, so generally valid for 3 years, and the validity of the peer review certificate issued to the new units has to be decided by the board. And the council may, for such reasons as may be prescribed by, extend the validity of the extending peer review certificate. That they had done it during the COVID times also. Okay, that was not possible to get the peer review done. So existing peer review certificate, the validity they had extended. Okay, right. Yes. So is it interesting? Yes, is it interesting? Is it important that you go through the content line by line over there? Very important for us to see the entire content over there, which is there regarding the peer review. One interesting point, that's what I was wondering, where is that point over there? Okay, on the unqualified report, the peer review board will issue the peer review certificate, but only after the reviewer confirms the fee receipt from the practice unit by him. So peer review certificate is to be issued by the peer review board, but before that they will confirm from the reviewer, did you receive your peer review fees from the practice unit? Yes, only then after that the report, the certificate will be issued. Right, only then the certificate will be issued. Okay, right, so same content, if I want to check it in the updated content of the book, right, this is where we have the updated content of the book. Right, so what does it talk about? The audit quality maturity model is being discussed over there. Right, so what does it say? The definition of the peer review, it says systems and procedures, whether they have been put in place to ensure the quality of assurance services as envisaged by the technical, ethical and professional standards as applicable, including the audit quality maturity model. Right, including the audit quality maturity model. Then you have the concept of the branch peer reviewer and also the concept of the new unit. Then the scope of peer review, what is the new point in the scope of peer review? The self-evaluation under the audit quality maturity model, right, or any other guideline as issued by the Center for the Audit Quality. Right, then the technical, ethical, professional standards, again what did I say? That includes any other technical, ethical, professional standards issued by any authority governing the profession of the chartered accountancy. Okay, then areas excluded from the scope of peer review, what is added over there? Any other service rendered or function performed by practitioner not prescribed by the council to be an assurance engagement. Then practice units subject to peer review, it could be mandatory or it could be the voluntary or it could be the special case review. Right, then mandatory, we have the phase 1, 2, 3, 4. Right, then the peer review board, the confidentiality to be maintained, then the eligibility to be peer reviewer. What is the eligibility? 7 years of audit experience. Now it says 7 years of the assurance practice experience, right? Then move from industry to practice, then also has undergone the requisite training and cleared the test for being a reviewer, right? Then the obligations of the practice unit, the reviewer, then the procedure for initiating the peer review, right? So you have the entire 3 reviewers, 3 days, then 1 reviewer within 1 working day, then form to be submitted within 2 working days, right? Then the process and then the compliance procedures and the substantive procedures to be followed in the peer review, right? So that's just an outline of the chapter of the peer review. Is it good? Like mainly the amendments which have come in the chapter of the peer review. Let us just quickly go to this NBFC part also, because that is also a higher chance of a question coming in the exam. Lucky you know, when there are amendments, there is a higher chance that that particular attempt a question could be coming from the amendments. Okay, right. So all good? Are we good? Right. So are you, yes, having a good revision, right, of the entire discussion over here? Right, so we've already completed it in the amendment class, but yes, I want to again sit, yes, you know, ensure and sit on your head and ensure that once again you've looked into the discussion, because it is certainly an important area. Okay, don't worry, once we finish with this, we'll go to some other part of the discussion also. All of you there? Listening? Okay, amazing. Right, no other questions, no other comments so far. Okay, right, now coming to the audit of the NBFCs, in which they have the various layers of the NBFC. And what are the layers of the NBFC that they are talking about over here? They are talking about the base layer, right? They are talking about the base layer, then the middle layer, then the top layer, is the upper layer and the top layer, right? The upper layer, and then also talking about the top layer, right? Also talking about the top layer. Okay, right, which will come under the base layer. It says what will come under the base layer is the non-deposit taking NBFC having asset size of less than 1000 crore, because if non-deposit taking NBFC having asset size of 1000 crore and above, that is coming under the middle layer. Right, so non-deposit taking NBFC having asset size of less than 1000 crore. And second, depending upon the activities. So what are the activities they are talking about? PP, the peer-to-peer lending. Then the AA, that is the account aggregator. Then the non-operative financial holding company. So that is the FHC. And without having access to the public funds or not having any customer interface. So not having access to the public funds or does not have a customer interface, right? So these type of the NBFCs which are engaged in the following activities. One, what does it say? Peer-to-peer lending, then the account aggregator, then the non-operative financial holding company, and the NBFC which is not having the not availing the public funds and not having any customer interface, right? So one, what does it say? Non-deposit taking NBFC of asset size of less than the 1000 crore. And apart from that, what does it say? Based on the activities. And which are the activities that they are talking about over there? Peer-to-peer lending, account aggregator, then the non-operative financial holding company, and the not availing the public funds and not having the customer interface. That is the base layer. Right. Then what comes in the middle layer? It says the deposit taking NBFC. So all D1s, all yes, ND less than 1000 crore come under the base layer, but all deposit taking NBFCs come under the middle layer. Then what does it say? All non-deposit taking NBFCs having the asset size of more than or equal to 1000 crore, they come under the middle layer. Then NBFCs undertaking the following activities, right? So now what are the activities that they are mentioning over here? One, the NBFCs which are the standard primary dealers, right? The standalone primary dealers. Then the infrastructure debt fund non-banking financial company. Then the core investment company. Then the housing finance company. And the last one is the infrastructure finance company, right? So here they had the 4 activities. Here they are having the 5 activities. Which 5 activities? Standalone primary dealers, then the infrastructure debt fund, then the core investment company, housing finance company, and the infrastructure finance company. Right. Then after the base layer and the middle layer, you have the upper layer. In the upper layer, what does it say? Top 10 eligible NBFCs in terms of their asset size will reside in the upper layer irrespective of any other factor. So based on the asset size, top 10 will be coming in the upper layer, and top layer will ideally remain empty. This layer can get populated if the RBI is of the opinion that there is a substantial increase in the potential systemic risk from specific NBFCs in the upper layer. Right, so from the upper layer, so from base and middle layer, can it shift to the top layer? No, only from the upper layer it can shift to the top layer. And when can it shift? When RBI is of the opinion that there is a substantial increase in the potential systemic risk from the specific NBFCs in the upper layer, such NBFCs to be moved to the top layer from the upper layer. Okay, right, so those are the 4 layers of the NBFC. Now what do they talk about? The categorization of the NBFC carrying out the specific activity. So depending upon what activity is being carried out by the NBFC, depending upon what the activity is being carried out by the NBFC, you will decide it will remain in which layer. Right, so the first 4 friends, first they had 4 friends over there, then they had the 5 friends over there. Which are the 4 friends over here? The peer-to-peer lending, account aggregator, then the financial holding company, not having availing public funds and not having customer interface, right? And then you have the standalone primary dealers, infrastructure debt fund, core investment company, housing finance company, and the infrastructure finance company, right? So the first 4 friends, they will always remain in the base category, right? So peer-to-peer lending, account aggregator, financial holding company, and without having public funds and customer interface will always remain in the base layer. So first 4, they will always remain in the base layer. Then after that you have the NBFC, which is the deposit taking NBFC, then the core investment company, infrastructure finance company, and the housing finance company. They may be included in the middle layer or in the upper layer and not in the base layer. Right, so debt, then after that the core investment company, infrastructure finance company, and the housing finance company. What does it say? These may be included in the middle layer or in the upper layer. And in case of the standalone primary dealers and the infrastructure debt fund, non-banking financial company, they will always remain in the middle layer. So now those 5 friends over here have been split into the 2 parts. What are the 2 parts in which it has been split into? Right, what are the 2 parts in which it has been split into? One, it talks about the standalone primary dealers and the infrastructure debt fund. These will always remain in the middle layer. And then what does it say? Core investment company, housing finance company, infrastructure finance company, and the deposit taking NBFCs. They may come in the middle layer or they may come in the upper layer. They may come in the middle layer or the upper layer. Okay, right. Then after that, the remaining NBFCs, that is investment and credit company, microfinance institution, and the mortgage guarantee company. So ICC, MFI, that is the microfinance institution, and the mortgage guarantee company, they can come in any of the layers. So first one is coming only in the base layer. Then next 4 are coming into the middle or the upper layer. Next 2 are coming only in the middle layer. Now remaining NBFCs, investment and credit company, then the microfinance institution and the mortgage guarantee company can come in any of the layer. And government owned NBFCs will come either in the base layer or in the middle layer, as the case may be, and they will never come in the upper layer till further notice. And if they cannot come in the upper layer, there is no question of they coming into the top layer. Right, so government owned NBFCs can come only either in the base layer or the middle layer. Okay, right, so these 2 questions, what are the various layers of the NBFC? This is the earlier answer which you need to write down: base layer, middle layer, upper layer, and the top layer. And what is the categorization of the NBFCs carrying out these specific activities? Then this is the answer which you need to write down. Okay, right, so is it good for everyone? Right, so have we discussed the amendments, given specific focus on the amendments over there? Okay, right, so quickly we will revise the 21 clauses of the CARO 2020, and then after that we will go to our MTP discussion over there. Okay, yes, peer review notes is what is there in the RTP of the ICAI, just in the marking over there. And okay, right, so mind maps, we don't have the latest version of those, so yes, that is not there. Okay, right, so you have the Audit Express, which is the latest one. Are we all there? Yes, are you listening to me, all of you? Okay, right. So now let's talk about the Caro, right? Caro, one, we need to know the applicability of Caro, and there could be one more way by which you can remember the 21 clauses of the Caro 2020. I don't know whether you know of any other way, but right now I'll tell you one way by which you can remember the 21 clauses of the Caro 2020, right? So number one, what is the number one asset of the company? It is the property, plant, equipment. So that is why clause 1. Right, so number one asset of the company is the property, plant, equipment, and the intangible assets. Right, so that is why it is the clause 1. Right, the number one asset. Then, which is the AS regarding the inventory? It is the AS2 or the Ind AS2. Right, regarding the valuation of the inventories. That is why clause 2 is regarding the inventory and the working capital. Clause 2 is regarding the inventory and the working capital. Right, then after that you have the clause 3. Right, clause 3. Now for the 3 you need to remember a tree, and on the tree, what is hanging on the tree? LIGS. What is LIGS? Loans, investments, guarantees, securities, the details of the transaction. And then also in clause 4, also what is hanging on the tree? Again, LIGS, loans, investments, guarantees, securities. Are they in compliance with section 185 and 186, right? So clause 1 and 2, clause 3 and 4. Then after that, coming to the clause 5. What is clause 5? It is regarding the public deposits, right? The deposits from the public. So how many public deposits have been accepted? 5 crore public deposits have been accepted. Then how many cost records is the company required to maintain? How many cost records is the company required to maintain? The company is required to maintain the 6 cost records. Then how many statutory dues are required to be paid by the company? Yes, how many statutory dues are required to be paid by the company? 7 statutory dues are required to be paid by the company. Right, then after that, how many times the company did not disclose its income? How many times the company did not disclose its income? It did not disclose its income 8 times. It did not disclose the income 8 times. Then how many times did the company made a default in the repayment of the dues? How many times did the company make a default in the repayment of the loans or borrowings? 9 times it made a default in the repayment of the loans or borrowings. How many times did the company come up with an issue proceed? How many times did the company come up with the issue proceeds? 10 times. The company came up with an IPO, FPO, including the debt instrument or the preferential allotment or the private placement of the shares or debentures. Okay, right. Then how many times was a fraud done in the company? 11 times a fraud happened in the company, right? How many times did fraud happen in the company? 11 times there was a fraud which happened in the company. Right, then at what time you were supposed to meet Nidhi? You were supposed to meet Nidhi at 12 o'clock, right? So that is the Nidhi company, which is 12 o'clock. At what time you were supposed to meet Nidhi? You were supposed to meet her at 12 o'clock, right? So that is why it is the clause 12. Then, I think by now you would have guessed what would be the further ones over there. What does it say? Okay, how many related parties are there of the company? There are the 13 related parties. How many related parties are there of the company? There are the 13 related parties of the company. Then how many internal auditor reports were issued? How many reports were issued by the internal auditor? So 14 reports were issued by the internal auditor. So 14 internal audit reports were issued. Then how many non-cash transactions did the company enter into? The company entered into the, right, how many non-cash transactions the company entered into? The company entered into the 15 non-cash transactions. Okay, then on which date did the company apply to the RBI for registration? On which date did the company apply to the RBI for the registration? On the 16th they applied to the RBI for the registration. On 16th they applied to the RBI for the registration. Then how much cash losses have been incurred by the company? How much of the cash losses have been incurred by the company? 17 crore cash losses have been incurred by the company. 17 crore cash losses have been incurred. On which date did the auditor of the company resign? The auditors of the company resigned on the 18th. Right, right? So on which date did the auditors of the company resign? The auditors of the company resigned on the 18th, right? Then there are how many material uncertainties regarding the ability to meet the liabilities? There are the, right, how many material uncertainties regarding the ability to meet the liabilities? There are the 19 material uncertainties regarding the ability to meet the liabilities. There are 19 material uncertainties. Then how many CSR activities is the company conducting? How many CSR activities is the company conducting? They are conducting 20 CSR activities, right? They are conducting 20 CSR activities. And how many companies are included in the consolidated financial statements? How many companies are included in the consolidated financial statements? 21 companies are included in the consolidated financial statements, right? How many companies are included? 21 companies are included in the consolidated financial statements. Oh my God. Yes, we always happen to do a good job, right? Right? Whenever we study, we do a great job. Right? So is it better to remember it this way? So you keep it in your mind. 5 crore deposits, 6 cost records, 7 statutory dues, 8 times did not disclose income, 9 times made a default in repayment of dues, 10 times, they came up with an IPO, then 11 times they did a fraud, 12 o'clock you were supposed to make Nidhi, 13 related parties, 14 internal audit report, 15 non-cash transaction. On 16th, they applied to the RBI for registration, 17 crore cash losses. On 18th, the auditors resigned. There are 19 uncertainties regarding the ability to meet the liabilities. And then there are 20 CSR activities and the 21 companies in the CFS. Okay, right, 21 companies. Yes, the company, subsidiary company, which is to be included. Okay, right. So all good, everyone. Right. So now let's move on to our discussion of the MTP. Right, let's proceed with our discussion regarding the MTP. Right, so now coming to the MTP2 over there. Right, so Shreyansh and company chartered accountants have been appointed as the statutory auditor. The audit team has completed the audit and is in the process of preparing the audit report. Management of the company has also prepared the draft annual report. Audit in charge was going through the draft annual report. Now when you read so much of it, only your mind should say 720 other information. And the auditor's responsibilities relating to the other information, and observe that the company has included an item in the annual report indicating the downward trend in the market prices. This question we had seen it the other day, right? So there is a material misstatement of the other information. There is a material misstatement of the other information. So as an auditor, what I need to check, whether the material misstatement of the other information, whether management agrees to correct or management does not agree to correct. Right? So there is a material misstatement of the other information. So if management agrees to correct, then you determine that the correction has been done. If management refuses to correct, you communicate it to the TCWG. And contention of the audit firm that the auditors are not concerned with such disclosures made by the management in the annual report is incorrect. Right? The auditor is very much concerned. Okay. Right. Then after that, we have the Abhinandan and company was appointed as the auditor of Nandan Limited, a company operating in the telecom sector. As per the spectrum allocation agreement with the government, Nandan Limited is required to pay certain percentage of its revenue as license fee. Nandan paid the license fee on its core business for the last 2 years. At the end of the third year, the communication was received from the government that it needs to pay the agreed percentage on its total revenue and not only on the core business revenue. Matter was disputed and went to the court of law. On prudence basis, Nandan Limited made a provision on the estimated basis in its books of account of the agreed percentage on the non-core business receipts also. The amount of provision was of such huge amount that Nandan Limited profit and loss account for that quarter reflected a loss due to that provision. How you as an auditor can evaluate this accounting estimate, which involves the significant risk? And what if the management has not addressed the effect of the estimation uncertainty on the provision made? Whatever spectrum allocation, whatever they have written so far has no impact at all. Only this is the part of the question where you see the question. How you as an auditor can evaluate that the accounting estimate which involves the significant risk, right? So accounting estimate, there is an RMM, and that RMM is an SR. It is a significant risk. That means which requires the special audit consideration. It requires the special audit consideration. What does it say? And what if management has not addressed the effect of the estimation uncertainty, right? The inherent lack of precision in its measurement. Okay, right? So auditors' responses to the assessed risk, to the significant risk, right? So what is one response of the auditor? So 330, which talks about the responses of the auditor, right? There is a significant risk in the accounting estimates. What will be the other substantive procedures to be performed by the auditor? Okay, don't tell me what assumption you have taken, why you have taken, what assumption you've not taken, why you have not taken, right? So how management has considered the alternative assumptions. Then whatever assumptions they have considered, are they reasonable? So what assumptions they have not considered, that is assumptions which have been rejected, and how management address the estimation uncertainty. Then whatever assumptions are being made, are they reasonable? Then also the reasonableness of the significant assumptions. So one point says significant assumptions, are they reasonable? Then it talks about the reasonableness of the significant assumptions used by the management and the intent of the management to carry out the specific courses of action. That they say even 1% defect in the product and we will do the refund of the product. So whether really they have an intent to carry out these specific courses of action and its ability to do so. And if in the auditor's judgment the management does not adequately address the effect of estimation uncertainty, the auditor will develop a range with which to evaluate the reasonableness of the accounting estimate. So you're not certain regarding how much will be the liability which may come on the company due to this dispute. You can't say whether it will be 50 crore or 55 crore. So that is why you come up with a range. Okay, the liability of the company will be in the range of 50 to 55 crore. Like the liability of the company will be in a range. Then how alternative assumptions have been rejected. Then whether the significant assumptions, are they reasonable. Then the reasonableness of the significant assumptions used by the management as or the appropriate application of the AFRF and the management's intent to carry out the specific courses of the action. And in case if they are not able to address the estimation uncertainty, the auditor will develop a range with which to evaluate the reasonableness of the accounting estimate. Right, so that's a very specific question from SA 540, auditing of the accounting estimates, including the fair value accounting estimates and the related disclosures. In the financial year 22-23, Saransh Limited faced an extraordinary event, earthquake, which destroyed a lot of business activity of the company. These circumstances indicate material uncertainty on the company's ability to continue as a going concern. Due to such event, it may not be possible for the company to realize its assets or pay off the liability during the normal course of business. The financial statements and the notes to the financial statements do not disclose the fact. What kind of opinion should the statutory auditor of Saransh issue in such circumstances and why? And also draft the opinion and the basis for opinion paragraph for the same. Will you do it? The moment I tell them to write some answer, they will immediately stop watching the YouTube video. That is how the kids are, so very, I don't know, don't want to say anything. Okay, right. But what is the question regarding? Very good. At least that much you know. Yes, it is regarding the SA 570. What a name, dilemma, why dilemma, or maybe it's, I'm pronouncing it in the correct, incorrect way. It may be dilemma, or I don't know. Okay, right. So anyways, yes, if user auditor request any auditor other than the auditor of service organization to audit service organization, then is it 402 or 600, right? Then it is subservice auditor, so it will come to 402 as such. Okay, right. So what happens in this particular case over here? Okay, the auditor is saying that there is a material uncertainty, will not be able to realize its assets and pay off its liability. So what kind of opinion should be issued by the auditor? The adverse opinion should be issued. And what draft opinion? So you have to draft the adverse opinion paragraph that the financial statements do not give a true and fair view, in our opinion, because of the omission of the information contained in the basis for adverse opinion section of our report. The accompanying financial statements do not present fairly or do not give a true and fair view of the financial position, the financial performance, and the cash flows for the year ended on that date. Okay, and what is the reason for the adverse opinion? The basis for adverse opinion: Saransh Limited has faced an extraordinary event, that is an earthquake, which destroyed a lot of business activity. Due to such event, it may not be possible for the company to realize its assets or pay off its liabilities. This is such an amazing sentence. This situation indicates that a material uncertainty exists that may cast a significant doubt on the entity's ability to continue as a going concern. And the financial statements and the notes to the financial statements of the company do not disclose this fact. If you are not able to write down the correct wording and the framing of your answer, तो अगर मुझे हिंदी में बोलना अगर तुम परमिट करोगे, है ना, तो फिर गई भैंस पानी में, है ना, कुछ फायदा नहीं, है ना. नो यूज ऑफ, है ना, गई भैंस पानी में, बफेलो वेंट इनटू द वाटर, है ना, समथिंग लाइक दैट. नो यूज ऑफ ऑल द एफर्ट, ऑफ ऑल द अंडरस्टैंडिंग, ऑफ ऑल द concepts and all the memory, if you are not able to do the correct framing of the answer, the correct presentation of the answer, the correct time management of the answer. And obviously for all this, first you have to identify the question correctly. Don't be over smart thinking that I will write something on my own and I say I will give you the marks. No. Even if you get the marks, those marks will not be sufficient for clearing the exams. You understand that? Right? Then it's a matter of luck, okay, whether you get, the examiner gets convinced with what you are writing over there or does not get convinced. So now also still the ball is in your court. Time is in your hands so far. So please look into the format, the type of answers. There is a reason. I could have discussed. I discussed peer review chapter with you. I could have discussed 10 other chapters also with you. But no, according to me, what I think is more important, कि भाई ये format of answers, this should be fixed into your mind. And then this is what is required to be there in your mind. So how to present the answers? So present your answer, you write down in the, what do you say, sentence formats. You leave, you write down, mark the important, underline the important words over there, right? And then you write down the, what do you say, the provision over there, the auditing standard or so. Then after that you come to in the given case and then you give the conclusion. So first you write down the theory, the provision over there, some accounting standard, auditing standard, company law, tax audit, ethics, caro or whatever. Then you write down in the given case and then you come to the conclusion. Okay, right? Why that much strict evaluation? Okay, right? So that is because the passing percentage. Anyways, let's not talk about such type of things right now. So now coming further, right? Let's proceed with our discussion. JIN Limited at its AGM appointed JIN as joint auditors to conduct the audit for 22-23. For the valuation of gratuity scheme, JIN wanted to refer to their own known actuary. Due to difference of opinion, all the joint auditors consulted their respective actuary. Subsequently, major difference was found in the actuarial report. However, J agreed to I actuary report, though N did not. J contends that I actuary report shall be considered in audit report due to majority of the votes. Oh my God, no. What does it say? The joint auditors having a different opinion may report separately, not bound by the views of the majority of the joint auditors. Now N is in a dilemma. Don't be in a dilemma. You can say, issue a separate audit report. Explain the responsibilities of the auditor in case report made by I's actuary later on was found faulty. Right? So in case if N has report separately, then he will not be liable, whereas J and I, who has combined and issued the report, they are going to be liable. Okay. And now they're using the work of the actuary. So before you use the work of the actuary, you have to check the adequacy of the work. How do you check the adequacy of the expert's work? Right. So first the question is regarding the 620 and also regarding the 299. Right. So what does it say? How to check the adequacy of the expert's work? You need to check the relevance and reasonableness of the findings and conclusions. Then you need to check the relevance and reasonableness of the assumptions and methods. And then you also need to check the relevance, accuracy and completeness of the source data. Right. So findings and conclusions, then the assumptions and methods and the source data. And this is how you evaluate the adequacy of the work in the given case. What has happened in such situation? It was the duty, yes, before issuing the report, right, to consider the assumptions and methods which have been used by the actuary. Also checking the source data which has been used by the actuary. J and I will be held responsible for gross negligence as and using such faulty report without examining the adequacy of the expert's work, whereas N will not be held liable for the same due to separate opinion expressed by him. Right, so due to the separate opinion expressed by the auditor. Okay, next one, the volatility, unpredictability, and the pace of fast changes that exist in the automated environment today is far greater than in the past, and consequently throws more risk to business, which requires them to have a need to continuously manage such risk. State various risks which an enterprise may have to face and manage. Tell me which chapter, which heading, what is the question? Yes, audit is our core area, so they expect expert knowledge, right? Rather, CA final at all subjects, they expect the expert knowledge. Okay. Yes. The question is from the chapter of what? Do you think auditing standard? No, 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 my God, then there is a big problem. Yes, it's from the chapter of the automated environment. In automated environment, there is a question over there regarding the enterprise risk management. In the enterprise risk management, we have a discussion over there regarding the examples of risk. And here they are talking about the various examples of the risk, right? So what are the different types of risk that they are talking about? One, they are talking about the market risk, then the operational risk, the credit risk, and the environmental risk. So these are all the risks which one word. Market risk, then the operational risk, then the credit risk, right? The credit risk, and then also the environmental risk. Then after that you have the two words, regulatory and compliance, technology and security, product or project. Right, so regulatory and compliance, technology and security, product or the is product or the project risk. And then after that you have two words, so these words are joined with the and or, and now these are direct two words, financial reporting risk and the business partner risk. The financial reporting risk and the business partner risk, right? The financial reporting risk and the financial reporting risk and the business partner risk, right? So what are these? These are the risks which are there in the automated environment, right? So what are the risks? Market risk, operational risk, credit risk, environmental risk. Then regulatory and compliance, technology and security, product or project risk, and then you have the financial reporting risk and the business partner risk. This question has already come in your exams as a 5-mark question, right? It has already come as a 5-mark question in your exams. Okay, next one. CA Vasu, a newly qualified professional with certificate of practice, approached CA Anand, the auditor of his father's company Crest Limited, to allow him to have some practical and professional knowledge and experience in his firm before he can set up his own practice. Anand allowed him to sit in his office for 6 months and allocated a small chamber with other office infrastructure facility. In the course of his association with CA Anand's office, he used to provide tax consultancy independently to the client of the firm and also file few returns and represented before tax authorities, although no documents were signed. During his association in CA Anand's office, he did not get any salary or share of profits or commission, but only reimbursement of usual expenses. And after the end of the agreed period, he was given a lump sum amount of 2 lakh by Anand for his association out of gratitude. Give your comments with reference to the Chartered Accountants Act 1949 and the schedules there too. Okay. Right. Give your comments. What is this? I am allowing one CA to practice in my name. Who can practice in my name? Another CA in practice. But that another CA in practice should be my partner or should be my employee. Now here he is just allowing the another CA to practice in his name, whereas that other CA is not his partner or is not his employee, right? So what does it say? Clause 1, part 1 of the first schedule. What does it say? States that a chartered accountant in practice shall be deemed to be guilty of professional misconduct if he allows any person to practice in his name unless such person is also a CA in practice and is in partnership or employed by him, right? So to prevent unqualified accountants from working under the cover of the qualified accountants in the given case, and therefore Anand will be held guilty of professional misconduct as per the clause 1 part 1 of the first schedule. Okay, Right, then coming to the next question. You have been appointed to carry out the audit of Paradise Life Insurance Company Limited for 22-23. During the course of audit, you observed that the commission payable to the agent constituted a major expense in the operating expenses of the company. Enumerate the audit concerns that address to the assertions required for the auditor to ensure the continued existence. Hey Bhagwan, how much they write. The continued existence of internal control as well as the fairness of the amount and accounting of the commission payable to the agent. Can't they write short note on commission payable to agent of life insurance company? I know that's the crux of what they are trying to say over here. A commission payable to the agent of the life insurance company. No, but full drama. Without drama, no question being asked over there. Right? So commission payable to the agent of the life insurance company. Of insurance company chapter, it has its own challenges. Why? Because insurance company chapter, two insurance, general insurance and the life insurance. There are questions regarding the verification of the premium of the general insurance company, verification of the premium of the life insurance company. Then claims paid, provision for the general insurance company and the claims for the life insurance company. Then you have the commission payable to the agent of the general insurance company, the commission payable to the agent of the life insurance company. Then you have the investments, how to do the audit of the investments of the general insurance company, how to do the audit of the investments of the life insurance company. And fortunately or unfortunately, all these answers are different. What points you write for the verification of claims provision for a general insurance company? Absolutely no correlation with the points which are there for the audit of the claims of the life insurance company. Okay, right. So anyways, right now what is the question? The commission payable to the agent of the life insurance company. So for the payment of the commission, one, you need to check the calculation of the commission. Right, so one, you need to check the calculation of the commission. Then after the calculation of the commission, you need to check the payment of the commission. Is it in sync with the premium collection system? So premium collected, commission paid. Right, so commission payment system. Then how much commission should be paid? It should be paid within the limit which has been prescribed under the act. And say when the policy was issued, the premium was paid to the agent. When the policy premium was received, the commission was paid to the agent. Now say the policy is getting cancelled, so you're refunding the premium. So whatever commission was paid to the agent, that also need to be clawed back. That also needs to be taken back. So commission is clawed back on the cancelled policies. Right, so what does it say? One, the calculation of the commission. Then the commission payment system is in sync with the premium collection system. Then commission paid is within the limit and commission is clawed back on the cancelled policies. Okay, right, so that is regarding the commission payable to the agent of the life insurance company. Then NAMI is the contractor dealing in food catering, flower decorating and the light decorating activities. He has received a contract in respect of food catering and flower decorating from one NGO for holding the annual talent evening event to celebrate completion of 15 years of the establishment. For this said event, NAMI has received in cash 1,85,000 for food catering and 1,25,000 for flower decoration. As a tax auditor, how would you deal and report on the above? Right, so how would you deal and report on the above? It will come under the clause 31B. Right, it will come under the clause 31BA. Right, what does it say? Receipts of more than 2 lakh for a single event or occasion being received in cash. Right, so receipts for a single event or occasion being received in cash. Right, so section 269 ST provides that no person shall receive sum of 2 lakh or more in aggregate from a person in a day or in respect of a single transaction or in respect of transactions relating to one event or occasion from a person other than by account pay check or account pay draft or the ECS. Further, the tax auditor has the responsibility to verify the compliance with 269T. Right, the tax auditor is required to report under clause 31BA. Right, 31 is regarding the loan accepted or repaid of more than 20,000 other than account pay check draft or ECS, and also it is regarding the receipts and payments of more than 2 lakh in cash. Right, receipts and payments of more than 2 lakh in cash. Right, so particulars of each receipt, right, in an amount exceeding the limit specified under 269 ST in aggregate from a person in a day in or in respect of a single transaction or in respect of transactions relating to one event or occasion, right, other than by account pay check draft overdraft or ECS, then the NAP, that is the name, address and the PAN, then the nature of the transaction, amount of receipt and the date of the receipt in the given case, and thus the tax auditor is required to report the same in compliance with the clause 31BA of the form 3CD. So those of you who asked me a question, okay, what is the format of the answer? First you write down the provision, then you write down what happened in the given case, and then you give the conclusion. Okay, Vishal, a practicing CA, issued a certificate of a circulation of a periodical without going into the most elementary detail of how the circulation of the periodical was being maintained, by not looking into the financial records, bank statement or the bank passbook, and by not examining evidence of the actual payment of the printer bill, and by not caring to ascertain how many copies were sold and paid for. Give your comments with reference to the Chartered Accountants Act. And so certified the circulation of a periodical or a magazine. What do we say? Periodical magazine. And a CA certified without checking the most elementary details and without checking into the records for the same. So CA is going to be guilty of professional misconduct under the clause 8 of the part 1 of the second schedule. What is clause 8 part 1 of the second schedule? Fails to obtain the sufficient information which is necessary for expression of opinion, or its exceptions are sufficiently material to negate the expression of an opinion. Right? So clause 8 part 1 of the second schedule. Right? What does it say? Fails to obtain sufficient information which is necessary for expression of opinion, or its exceptions are sufficiently material to negate the expression of an opinion. Right? Do you all know the part 1 of the second schedule? Oh my God. Yes. Do you all know the part 1 of the second schedule? I'm not talking about the first schedule. I'm talking about the second schedule. Right? Part 1 of the second schedule. What is clause 1 over there? Right? Breach of confidentiality, CA in practice. And a fails is, what does it say? Discloses information acquired in the course of his engagement to any person other than the client so engaging him, or unless required by any law. Right? Then what is clause 2? Certifies or submits in his name or in the name of his firm any report on examination of financial statements, unless the examination of the financial statements and the related records has been done by he, his partner, his employee, or another CA in practice. Then clause 3, part 1 of the second schedule, if he permits his name to be used in connection with estimate of earnings contingent upon the future transaction in a manner which may lead to the belief that he vouches for the accuracy of the forecast. Right. Then clause 4, expresses his opinion on the financial statements of any business or enterprise where he, his partner, his firm, or his relative is 18 or in days 24 has the substantial interest. However, what does it say? Information system work is allowed. Expressing opinion on financial statements not allowed. Then 5 onwards, this fellow starts failing. Right? And clause 5, why does it fail for? Clause 5 fails to disclose a material fact known to him which is not disclosed in the financial statements, but disclosure which is necessary in the making of the financial statements where he is concerned with such financial statements in a professional capacity. Then clause 6 fails to report a material misstatement known to him which is not disclosed in the financial statements with which he is concerned in a professional capacity. Right? Then clause 7, I'll again come on the left hand side, does not exercise the due diligence or is grossly negligent in the conduct of the professional duties. And it does not exercise the due diligence or is grossly negligent in the conduct of the professional duties. Okay, right. Then coming to clause 8, which is regarding the fails to obtain sufficient information, the one which we discussed right now. And fails to obtain sufficient information which is necessary for expression of opinion, or its exceptions are sufficiently material to negate the expression of an opinion. Then clause 9 fails to invite attention to any material departure from the generally accepted audit procedures applicable to the circumstances, and fails to invite the attention. And then clause 10, which is regarding the fails to keep monies belonging to his client in a fails to keep monies belonging to his client in a separate banking account, or to use such monies for the purposes intended by the client within a reasonable time. right, or to use such monies for the purposes intended by the client within a reasonable time, right? So that's anyways just a quick revision of the part 1 of the second schedule. That's a quick revision of the part 1 of the second schedule. Is it clear to all of you? Okay, right. So 10 is regarding the separate bank account. Okay, right. So here it talks about the clause 8 part 1 of the second schedule. The chartered accountant should not express opinion without obtaining the data and information. Therefore, Vishal will be guilty of the professional misconduct under clause 8 part 1 of the second schedule. Okay, next one. Interesting new question, star mark. Chandan Bala Limited had 5 subsidiaries as of 31st March 2023, and the investments in these subsidiaries are considered as long-term and valued at cost. 2 of these subsidiaries had their net worth eroded as of 31st March, and the prospects of their recovery are very bleak. And the other 3 subsidiaries are doing exceptionally well. So 2 net worth gone and 3 exceptionally well. The company did not provide for the decline in the value of investments in 2 subsidiaries because the overall investment portfolio in the subsidiaries did not suffer any decline, as the other 3 subsidiaries are doing exceptionally well. Comment in view of the relevant Ind AS. So do you need to consider it at the consolidated level or separate level also? You have to consider the impairment at the individual level. Okay, so as per Ind AS 27 on the separate financial statements notified under the company's Ind AS rule as amended, when an entity prepares separate financial statements, it shall account for investments in subsidiaries, joint venture and associates either at cost or in accordance with the Ind AS 109. In the given situation, they have valued their investments in subsidiaries at cost. Ind AS 36 impairment deals with impairment of investments in subsidiaries accounted for at cost under Ind AS 27. Right, as per the para, an entity shall assess at the end of each reporting period whether there is an indication that an asset may be impaired. If any indication exists, then the entity shall estimate the recoverable amount of the asset. It implies that impairment indicators for investment in subsidiaries is to be assessed by Chandan Bala Limited individually for each investment and not as a group of investment. Individually for each investment and not as a group of investment. As provided net worth of 2 subsidiaries have been eroded and chances of recovery is bleak. This implies that the indicators of the impairment in the value of investment in these 2 subsidiaries as on the reporting date. Therefore, Chandan Bala should provide for the impairment in the value of investment in those 2 subsidiaries, despite of the fact that the other 3 subsidiaries did not suffer any impairment. Right, despite of the fact that the other 3 did not suffer any impairment. Okay. Now, Nabirai is conducting the statutory audit of Hastinapur, NBFC. It has its branch in various parts of India. The company, with a focus on the housing finance, has outstanding non-convertible debentures of 170 crore. The company reportedly missed interest payments of 17 crore on its debts because of the inadequate liquidity. As a result, Limited faces a series of downgrading by the credit rating on its debts over the past 2 months. Rating was cut to D from A4, implying that the company was in default or expected to be in default soon. What aspects CA Nabirai should look into in relation to the activity of mobilization of public deposit, particularly in relation to downgrading of the credit facilities by Hastinapur Limited? Right, so there is a downgrading in the credit rating of the NBFC. Right, so what actions, what this auditor should need to check, right? What actions are required to be checked by the auditor? So what actions are required to be checked by the auditor? 1, what does it say? With immediate effect, it says they need to stop accepting the fresh deposits. Right, with immediate effect, they need to stop accepting the fresh deposits. Then all the existing deposits will run off to the maturity. Then this default position is required to be reported within 15 working days to the concerned regional office of the RBI. And no mature public deposit will be renewed without the express and the voluntary consent of the depositor. Right, so this is what the auditor needs to check in case if there is a downgrading of the credit rating of the NBFCs. What does it say? Immediately stop accepting any further deposits. Then what does it say? Existing deposits will run till maturity. Then the default position is to be reported to the regional office of the RBI. And then after that, what does it say? No mature public deposit shall be renewed without the express and the voluntary consent of the depositor. Okay. Right. So Can we answer it by considering 712? No, it is 812 because periodical magazine, the question comes under 812. That is how it has been seen. There was one question which I think, one point which some student mentioned. Yeah, not able to give time to audit because FR itself is humongous. Please tell how to utilize 2.5 days in the most effective manner. Okay, so once FR is done, SFM is done, anyways, that much of the load of the subject is over. And then after that, how you prepare for the subject is that, again, as I yes, is what the strategy should be, that you study a little bit of the standards. So like you have 36 standards, say the day you come back from your SFM paper, you look into the 12 standards, right? Then after that, you study 4 chapters, like say NBFC, PSU, peer review, quality review, and say consolidated financial statements. And you also study some set of clauses, like say ethics clauses, caro clauses, tax audit clauses, or so, right? Next day morning, again you pick up one more lot, right? Then after that, you again pick up one more lot. So likewise, in the lot wise, you finish the coverage of the entire syllabus. Then apart from that, you also need to look into the MTP, RTP, and the suggested. And what you need to do is you need to have the keywords highlighted over there. You should focus on remembering or revising only the keywords one day before the exam. And also you should do a practice little bit of the MCQs even before entering into the exam hall, because it's a skill set. And like if you have to do batting right now, then first you have to do some net practice over there. So similarly, MCQs, you have to select A, B, C, D over there. So before you have to select them, you should be doing some practice for the MCQs also. What students do now, they say, ma'am, I could only finish standards. Oh my God, bank audit only took so much time. And they don't look at MTP, RTP suggested. They don't look at the MCQ. So that is not right. You understand? No. In what happens, no, 2.5 day or 1.5 day before the exam, whichever question we look at, which our mind says, oh yeah, this might come in the exam, I should be knowing the points for this one, very important one. So now your approach has changed. All of a sudden, because earlier you thought FR, SFM, I'm going to get 60, 60, and audit anyways, I don't have great hopes from this subject, only 40 I want from audit. But now what happened? FR, SFM ditched you. There only 40. The full burden came on audit paper. Does that happen with you? Right? Does that happen with you? Okay. Right. So not that easy. Okay. Right. So that is how you need to strategize. You can even write down a few answers before, yes, what you say, and just 2.5 days before the exam also, you need to write down the answers, right? So do a little bit of the writing practice. See कि कारो का आंसर कैसे लिखा जाता है, टैक्स ऑडिट how to write down the answer, essay how to write down the answer, bank audit chapter how to write down the answer, right? So that is the manner of how you could prepare all day before the exam. And basically it's a matter of what you say, you not giving up to the pressure or not getting panicky under the situation, right? So because whatever you've studied so far, yes, you will be able to, even if you don't read it one day before the exam, if you've studied it properly, you will be directly be able to write in the exam. So whatever is possible, revise to the best of it. But if not, then you should be having a composition, right? A good composition of the mind. Okay. Right, so equal importance to all paper. Yeah. So that all you realize. Some students, they realize it after few attempts. What to tell you? Anyways, right now, you say, ma'am, you don't say like that. Okay, I will not say. मेरे बोलने से फर्क पड़ता है क्या? पर ठीक है, वो बोलते नहीं मैम आप ऐसा मत बोलो, ठीक है, मैं नहीं बोलती हूँ, ठीक है, अब बोल तो दिया है, ठीक है. Right. Sheetal is a practicing chartered accountant. Due to natural calamities and misfortune during the year, she almost lost all of his wealth and became the undischarged insolvent. After a few court hearings, finally in the year 2023, he was declared discharged insolvent and obtained a certificate from the court stating that his insolvency was caused by misfortune without any misconduct on his part. You are required to comment on the above situation, right? So is the disability for membership attracted? No, the disability for membership is not attracted because it is a discharged insolvent who has obtained a certificate from the court that the insolvency was caused due to the misfortune. Therefore, Sheetal has not violated the provisions of Section 8 and he is not debarred from having his name entered into the register of the members, right? So we've already seen that question. Right, next question. Sudarshan is a company engaged in the business of manufacture of spare parts. Prakash and associates are the auditors. During the course of audit, they noticed that a major customer, namely Korean Mart from South Korea, right, owing to the outbreak of war and subsequent destruction leading to government ban on import and export with Korea, the demand from Korean market for the product of the company has ended for an unforeseeable time period. So loss of major customers. When discussed with the management, CA Prakash was told that the company is in the process of identifying new customers for their product. CA Prakash understands that though the use of the going concern assumption is appropriate, but the material uncertainty exists with respect to the identification of the new customers. This fact is duly Areva reflected in the financial statements of Sudarshan Limited for 22-23. How should CA Prakash deal with this matter in the audit report, right? So is there going concern assumption appropriate? Yes. But is there a material uncertainty? Yes. Whether it is appropriately disclosed in the financial statements? Yes. So in that case, auditor, you will issue the unmodified opinion with the material uncertainty related to going concern para. Right, unmodified opinion with the yes, wonderful, with the material uncertainty related to the going concern para. So loss of a major market or a customer is one of the operating indication that may cast a significant doubt on the entity's ability to continue as a going concern. So this matter is duly disclosed by the management. So express an unmodified opinion and separate section material uncertainty related to the going concern, draw attention to the note. Okay, so this is how Prakash should deal with the matter. Okay. Next one, right? Bharat has appeared before the income tax authorities as an authorized representative of his auditee and submitted a false declaration to the income tax authorities. Oh my God, giving false information to the income tax authorities, section 278 of the income tax law. And giving the false information which he knows to be false or does not believe to be true will be liable under section 278 of the Income Tax Act. In case of submission of information which is false and which the chartered accountant either knows or believes to be false or untrue, he would be liable to rigorous imprisonment which may extend to 7 years and also to a fine. In the given case, therefore, the CA will be liable under section 278. Right, the CA will be liable under section 278. Okay. Next one. Rajul is acting as a credit manager in the branch of DFC Bank. A company has approached the bank. Oh my God, right? So much they write over there. Right? They're carrying out the SWOT analysis and all. Right? Based on the above. Again, this question we've already covered in the RTP. So identify the activity being performed by Rajul and discuss its nature. So it is the due diligence. And would your answer be different if this activity was performed by a person who is not a CA? Even that would be fine. Can a non-CA perform such an activity? Yes, that person has to be reasonable and prudent. And then name any 3 other areas where the identified activity can be undertaken. So in case of venture capital funding, in case of the capital, in case of the spin-offs, mergers, amalgamation, the activity could be done. Right? Corporate restructuring, venture capital financing, and the public offering. Right? Why I'm not discussing this question? Because we've already discussed it in our day 1 discussion. It was there in the RTP May 23. CNAG appointed a CA firm to conduct the performance audit of OM Limited, a PSU of the Government of India. The firm conducted the audit. So now CNAG appointed you to do the performance audit. Then the firm conducted the audit with a view to check all the expenses of the unit are in conformity with the public interest and the publicly accepted custom. Hey Bhagwan, you were told to do the performance audit, efficiency, economy, effectiveness of the operation. What you did the audit, propriety audit. Which audit you did? You did the propriety audit to check all expenses are in conformity with the public interest and the publicly accepted customs. The audit report submitted by the audit firm was rejected by CNAG. Reject hi hoga na? It will be rejected only because they told you to do performance audit. You ended up doing the propriety audit. Give your opinion on the action of the CNAG. So the action taken by the CNAG is correct. Okay, right. So what does it say in the given scenario? Then what is a performance audit? It is an objective and systematic examination, yes, which provides for an independent assessment of the performance of a government program, project, activity, function in order to improve the public accountability and facilitate the decision making by parties who are responsible to oversee or initiate the corrective action. Right? Performance audit, what does it say? You look into the efficiency, economy, and the effectiveness of the policy programs and so. Right? You add value which have the greatest potential for the development. Right? Let's lay down the responsibility for the development of the measurable objectives and performance indicators. Thus, the rejection of the audit report submitted by the audit firm by CNAG is in order, as audit with a view to mere check all the expenses of the unit are in conformity with is not performance audit in all aspects, right? It is not a performance audit in all the aspects. Okay. Then you are auditing a small bank branch with staff strength of the manager, cashier, and 3 other staff, S1, S2, S3. And sometimes they call them Peter, Prem, and Pran. And then some of the question. Among allocation of work for other areas, S1, who is a peon, also opens the mail. Oh my God. Mail is to be opened by responsible official. Here how the peon is opening the mail and forwards it to the concerned person. He does not have a signature book. He should have a signature book. So as to check the signature, not he, the responsible official should have the signature book. S2 has possession of all the bank forms. No, all the important bank forms, they should be kept under the joint custody of one officer and another responsible officer. He maintains a record meticulously, which you have checked also. However, no one among the staff regularly checks that. No, it should be checked by another person. You are informed that being a small branch with shortage of manpower, it is not always possible to check the work and records. Give your comment, right? So here the general internal controls in the case of the bank are not operating properly, right? They don't have the proper internal controls, right? So banks are required to implement and maintain a system of the internal control in the given case. And contention that it's a small branch, what does it say? They are not able to check the work is not tenable. Therefore, the auditor should report the same in his report accordingly. Okay, and then there is a question. You are appointed as an auditor of Moksha Limited, a company engaged in the export of agricultural equipment. During the course of audit, your audit team informed you regarding non-deduction of TDS on huge payment made to legal counsel. You want to alert your team on the possibility of non-compliance with law regulation. Help your audit team in identifying any other indications of non-compliance. So indications of non-compliance, one of the super favorite question of ICAI. And then the secretarial staff of the quality review board selected the following firms. So this question again, we've seen it in the RTP May 23, listed entities anyways included, and it is coming under the provisions of the NFRA over there, right? Insurance company, banking company. So only the last recommendation is proper, right? So only the last recommendation is proper. So you have either or over there, right? So indications of the non-compliance. What are the indications of the non-compliance? It says they have made the payments of the fines and penalties during the year, or they've made payments for unspecified services to the government employees, or they have made a payment of the high sales commission during the year, or they have made the higher payments for the purchases made during the year, or they have made the payments in the cash, or they have made the higher payments towards the legal retainership fee, or they have made the unusual transactions with the companies registered in the tax haven. So unusual payments to those companies, or payments are being made to another country other than the country from where the goods services originated, and payments without the exchange control documentation. Right, so what are these? These are the indications of the non-compliance. And then after that you have the answer regarding the, yes, the applicability of the NAFRA. And then after that only the inclusion of the name of the auditor AAZ in the draft panel is proper. Okay, right? So all good everyone so far? Have we managed to see? So because few of the questions were there in the RTP, right? So there was some sort of a repetition of the questions over there. So that is why we could, finish looking at this particular MTP quickly, right? So now what we'll do quickly, we will go to the MCQs in this particular MTP. Okay. Right. So let's begin. You are the internal auditor of Fairbank for 22-23 and the bank maintains all the data on the computer. You are instructed by your senior to verify the loan against FD of the Agra branch. As per the scope of audit, you need to ensure that proper lien has been marked on all the fixed deposits against which the loan has been sanctioned. Which of the following procedure you will follow for the same? Okay, ensure that all FD receipts against which the loan has been sanctioned are discharged in favor of the bank and the lien is marked in the computer software. Ensure that all the FD receipts are attached along with the loan documents. Discuss the process followed for lien marking with the branch manager. Ensure that all FD receipts against which the loan has been sanctioned are discharged in favor of the bank. Check that the lien is marked in the computer software, and the fixed deposit should be kept separately with the branch manager. Now, no need to keep it separately with the branch manager, right? So only the first set of points. Ensure that all FD receipts against which the loan has been sanctioned are discharged in favor of the bank, and the lien is marked in the computer software. Okay. Next one. ABC and Company Chartered Accountants have been approached by PQR, a company engaged in the iron and steel manufacturing industry. The company has been facing following operational issues: penal interest for delayed payments to the overseas vendors despite having enough cash flow, and despite having regular production and enough inventory, delay in shipping the final goods to the customers. As the partner of ABC and Company, through detailed discussion with the senior manager of PQR, you have concluded that all these delays are because of the long decision-making cycles in the company. The company approaches you to advise the type of audit it should get done: internal audit, management audit, operational audit, or audit is not required. They are facing operational issues, but due to the long decision-making cycle. So decision-making cycle means which type of audit will be required over here? Right? Which type of audit will be required over here? The management audit will be required. Okay. Then, while conducting the current year audit of Finco Limited, the auditor obtained evidence that a material misstatement exists in the prior period. So 710, prior period, there is a material misstatement. This misstatement was related to recognition of research and development expenditure. The provision of Ind AS 38 intangible assets relating to capitalization of development expenditure was not applied properly. On this, unmodified opinion had been previously issued. And so unmodified opinion was issued, whereas there was a misstatement. The current auditor verified that the misstatement had not been dealt with as required by the Ind AS 8 accounting policies changes and estimate. The current auditor will express a qualified or an adverse opinion in the audit report on the current period financial statements with respect to the corresponding figure, express an unmodified opinion in the audit report, express a qualified opinion in the audit report, or express an adverse opinion in the audit report on the current period modified with respect to the corresponding figure. So unmodified opinion, out of question. Now you have to decide qualified or adverse, or qualified or adverse opinion. And either you're sure that it has to be a qualified or an adverse opinion over there, right? So the matter is relating to the intangible assets in AS 38 regarding the capitalization of the development expenditure, right? So what does it say? Express an adverse opinion in the audit report on the current period financial statements modified with respect to the corresponding figures included therein. Right, modified with respect to the corresponding figures. Okay. XYZ Private Limited uses ERP software for all business processes. The application is hosted in cloud and is maintained by a third party. Statutory auditor is not confident about the risk management process in the third party organization and request for audit access to such data center. The request was declined and management informed that third party is ISO certified and audit on controls at service organization is regularly being conducted. What the auditor should do? Do not ask for anything else since the third party is ISO certified. Insist on conducting audit in the third party. Take the ISO certificate. Take the service organization control audit report to review. Right. So what seems most sensible over here is the take the service organization control audit report to review. Then section 130, reopening of the accounts on the court or tribunal order of the Companies Act, states that a company shall not reopen its account and not recast its financial statements unless and until an application in this regard is made by central government, income tax, SEBI, regulatory body or authority, and an order has been passed by a court of competent jurisdiction or the tribunal to the effect. Okay, now Muni Limited has a turnover of 375 crore and has been in losses for the last 2 years. The operations of the company are good. Due to some technology changes, the company started facing competition and started incurring the losses. The company plans to revive in the next 1 or 2 years with the improvement in the process. The management of the company came across certain transactions relating to 22 which were erroneously missed to be accounted for. This would result into losses, and hence the management is considering to take this to the right financial year, and for that purpose they want to reopen the accounts. अभी इधर story लिखा है ना कि you cannot reopen the accounts unless and until an application is received and an order has been passed by the court or tribunal. Can they reopen its accounts? No. So the action position of the management is correct. The action of the management is correct. However, reason behind an opening is not correct. Action of the management would have been correct had it been advised by the auditors of the company, or the action of the management is not correct, right? So the action of the management is not correct. Okay. Chandra Limited is a company engaged in the manufacture of iron and steel bars. VP and associates are the statutory auditors. During the course of audit, CA Vikas, the engagement partner, found that the company's financing arrangements have expired. Outstanding payable, the amount was outstanding. The company was unable to renegotiate or obtain the replacement financing and is considering filing for bankruptcy. These events indicate a material uncertainty that may cast a significant doubt on the company's ability to continue as a going concern, and therefore it would be unable to realize its assets and discharge its liabilities. The financial statements do not disclose this fact. What opinion should CA Vikas express in case of Chandra Limited? Right, so unmodified, out of question, no question of disclaimer. Here it is material uncertainty, adequate disclosures not made, considering filing for bankruptcy. So the auditor should issue an adverse opinion. Okay, as per the quality review board, the term technical standards in the context of the chartered accountant rules includes which among the following? Means three are not included. ICDS, accounting standards, guidance notes issued by the CNAG, notifications, directions of the RBI SEBI, which is included in technical standards, the accounting standards notified under the Companies Act. Okay. Next one, such an interesting question. Which among the following are the skills to be possessed by ABC and associates as forensic accountant? Which of the following are the skills to be possessed? Right, so criminology and evidence gathering, confidence and curiosity, discretion and creativity, inquisitiveness and persistence. Now, confidence and curiosity, discretion and creativity, inquisitiveness and persistence. These are not your skills. These are your characteristics. So what skills should be there with the forensic auditor? The criminology and the evidence gathering, right? The criminology and the evidence gathering. Okay. You are the audit senior in charge of the audit of Swadhyay and have been informed by your manager that during the current year a fraud occurred. A payroll clerk sets up fictitious employees and wages are paid into the clerk's own bank account. This clerk has subsequently left the company, but the audit manager is concerned that additional frauds have taken place in the wages department. Which of the following audit procedure would be undertaken during the audit of wages as a result of the manager's assessment of the increase in the risk of fraud? Discuss with the payroll manager the nature of the payroll fraud, how it occurred, and the financial impact of the account amounts incorrectly paid to the payroll clerk bank account. Review the supporting documentation to confirm the total of the fraudulent payments made and assess the materiality of this misstatement. Review and test the internal control. So one, it says discuss with the payroll manager, then review the supporting documentation, then review and test the internal control surrounding setting up of and the payments to new joiners to assess whether further frauds have been occurred, and review the legal action taken by the management against the payroll clerk who was involved in the fraud and see whether he is punished for his actions. Now, why would that affect the financial statements? No, why would the auditor be considered with the, concerned with that? That is separate. No company suing that particular clerk or something over there, right? So as an auditor, what audit procedure you need to perform? Audit procedure number 1, 2, and 3. Okay, right. And then after that, in the case of an unlisted corporate entity, other information section is required in audit report when at the date of audit report. Right, so listed entity, always you have to give the other information para, but other than the listed entity, for the unlisted corporate entity, other information section is required to be included in the audit report when auditor has obtained. So first three words are constant. Some or all of the other information, all of the other information, or expects to obtain the other information, or some of the other information. Right, so auditor has obtained some or all of the information. Auditor has obtained some or all of the other information. Okay. Next one. Sudharma and Associates have been appointed as the auditors. The company has complied with the SEBI LODR. When the audit was started, the management of We discussed with Sudharma about the internal control. The management discussed about the whistleblower policy. Yes, Sudharma was told that the team can rely on the information provided by the entity without any second thought. The management advised the auditor not to waste time in checking the direct entity level controls, instead to concentrate on the indirect entity level control. Further, We Limited has constituted audit committee and risk management committee, and these committees, they met only twice during the year based on the requirement. All the company matters were duly discussed. While conducting the audit, the auditor found that an MD&A, management discussion and analysis, is a part of the director's report. With respect to the non-financial information such as the industry structure, development opportunities and threats, the auditor was asked by the management to verify those particular facts and to comment on the same. Okay, right. Then since the financial year 22-23 is the first year after the incorporation, the company is in the process of exploring the market and venturing towards expansion plans. The management will be approaching the bank for raising the funds. The management accordingly requested the auditor to mention in their audit report about the entity's future viability. No. In one of the meetings of the audit committee conducted during the year, the internal control system and the audit report of Veer were discussed. And Sudharma was also present at the meeting, and the audit committee called for the comments of Sudharma, if any. Certain important decisions regarding change in control were duly taken by majority voting. Okay, right. Now, what should be CS Sudharma's audit plan regarding the checking of the direct entity level controls and the indirect entity level controls after considering the management's advice? Right, so should check the indirect entity level controls in detail and can skip checking the direct entity level control. Should check the direct entity level controls and skip checking the indirect entity level control. Should understand and evaluate both the direct entity level controls and the indirect entity level controls and accordingly decide the audit procedure. Right, so Dharma should check the indirect entity level control in relation to business process and contribute indirectly to the effective application of the direct TLC, and thus he can skip the checking of the direct TLC. Nothing of all this, both direct and indirect TLCs to be checked. Next one. Is the company justified in holding meeting of its audit committee and risk management twice in the year? Right? Risk management committee twice in the year. So risk management committee, they need to meet at least twice in a year. Right? Risk management committee, they need to meet at least twice in a year. But audit committee, they need to meet at least 4 times in a year. So the company is not justified in holding 2 meetings of the audit committee, as audit committee should meet at least 4 times in a year. However, the company is justified in holding 2 meetings of the risk management committee. With respect to the meeting of the audit committee attended by Sudharma, what all rights can be exercised by Sudharma? Right, so has a right to be heard and to vote? No. Has a right to vote? No. Does not have a right to be heard and to vote? No. Has a right to be heard at the meeting but does not have the right to vote. Right, has a right to be heard at the meeting but does not have the right to vote. Okay, what is the responsibility of Sudharma and Associates so far as the management discussion and analysis report of Veer Limited is concerned? Right, Sudharma and Associates should verify and comment on the non-financial information reflected as it forms part of the board report, should verify the non-financial information reflected as it forms part and can take expert opinion for analyzing, is required to review the compliance with the disclosure requirement and did not verify the facts relating to non-financial information reflected in the MDA report. And then Sudharma can verify and comment on the non-financial information provided additional fee for such work is given by the management. So no additional fee, no expert, no opinion, right? No expert and no included in the opinion. What does it say? It is Sudharma is required to review the compliance with the disclosure requirement and did not verify the facts relating to the non-financial information in the MD&A. Okay, next one. Siddharth Limited is one of the leading company in the cement manufacturing industry. Right from the incorporation, it has a subsidiary Girnar. The total shareholding of Girnar, Government of Tamil Nadu and Lakshadweep, 18% each. So that is 36, and Government of Goa is 15%, right? So Government of Goa shares, so 36 plus 15. So that is more than 51% is held by the as government, right? So it's a subsidiary of a government company. On 27th August, Jambu, the auditor of Siddharth, resigned from his post, citing personal reasons. He had forgotten to inform about his resignation to the concerned authority. Now, it's a government company, so within 30 days from the date of resignation, the auditor needs to file the form ADT3 with the company, with the ROC, and also with the C&AG, the Comptroller and Auditor General of India. Okay, the casual vacancy which was created by the outgoing auditor was filled by Maniprab and Company. However, a few shareholders raised certain objections which was later on settled. Right, and now what does it say? Maniprabha and Company agreed to the following. Charge fees at 7% of the paid up capital plus 0.1% of the net profit. However, Jambu used to charge only fee of 45,000. Okay, so now 7% percentage contingent basis fees guilty of professional misconduct, clause 10 part 1 of the first schedule. Right, then select and recruit personnel, conduct training program for and on behalf of Siddharth Limited. So 224 management consultancy other services includes design and conduct of the training program and selection and recruitment of personnel. Company was having a turnover of 1020 crore and hence it was also liable to tax audit. During the financial year, Siddharth Limited has changed its method of accounting compared to the previous year. So change in method of accounting that comes under clause 13. And a method of accounting, any change in the method of accounting, and had reported a closing stock of raw material amounting to 2 lakh only as on 31st of March. The company had borrowed a sum of 10 crore equally from two public sector bank and two NBFC. It has also repaid few deposits, right, to the deposit holders through electronic mode. So they've repaid through electronic mode. They borrowed the funds from the bank and NBFC. So that does not come under the clause 31. Then a loan accepted or repaid in form 3CD. Right, that as Maniprabha and Company chartered accountants are concerned, Ishan, who is one of the partners of the firm, Ishan does not sign the financials, has borrowed a sum of 3.91 lakh from Girnar Limited. He also purchased goods of 1.07 lakh. So 3.91 plus 1.07, that is coming to 4.98. Right, so what does it say? Indebtedness is not exceeding rupees 5 lakh, which was in the ordinary course of the business. Okay, right, and he is into teaching profession during his free time, approximately for 3 to 4 hours weekly. Right, so teaching profession. Right, upon hearing upon the efficient services of Maniprabha and Company, they were approached by a cooperative society to act as their auditor, to charge fees as a percentage of net profits or to charge fees of 501 rupees. On the basis of the above mentioned facts, you are required to answer the MCQ. Right. To whom should CA Jambu inform about his resignation? What could be the possible consequence of his non-compliance? He should inform the registrar and Siddharth Limited, inform the registrar alone, inform registrar and the Maniprab and Company, inform the registrar and the CNAG as a consequence of his failure, as he is liable to pay a fine of the 45,000. Why 45,000? Because 50,000 or the remuneration of the auditor, whichever is less. Right, or the remuneration of the auditor, whichever is less. So you should inform the registrar and the ROIS, the registrar and the CNAG. Right, with respect to the acts carried out by Mr. Ishan, the partner of the audit firm, what can you infer about the appointment of Maniprab and Company as auditors of Siddharth Limited? Right, it is valid since the indebtedness is within the limit. It is not valid since the indebtedness exceeds the limit of 1 lakh. Ishan is not signing, and it is valid since indebtedness is not with Siddharth Limited. No, it is valid since the indebtedness is within the limit. Which among the below are permitted as per the Chartered Accountants Act? Right, charge fees at 7%, select and recruit personnel or teaching activities for 3 to 4 hours weekly. Right, so percentage contingent basis fees not allowed, but selection recruitment of personnel allowed, and teaching activities not exceeding 21 hours in a week would be allowed. Right, so what is allowed over here is the 2 and 3. Right, so that is the C option. Okay. Right, with respect to the fees to be charged for its new assignment, which option can be opted by Maniprab and Company? And it's a cooperative society. Right, through XYZ cooperative society. So to charge fees based on percentage of net profits or to charge fees of 501. So it says either one or two, because cooperative society you can charge the fees on percentage basis. Among the below transactions which were undertaken by Siddharth Limited, which needs to be reported by the auditor under the fiscal laws? 10 crore loan taken, but it was taken from the bank and the NBFC. So no. Change in the method of accounting? Yes. Repayment of deposit? No, because it was done by the ECS, electronic mode. And reporting of the closing stock of raw material were 2 lakh? Yes, that is required to be reported. So that is 2 and 4, right? So that is B is the correct option. Okay. Right. So wonderful. Great to see your answers over there. And any concluding remarks? Anything that you would like, yes, to know about before we knock out our knockout series? Okay. Right. So did you notice your concentration, your perseverance? Okay, that you continuously for 2 hours you're attending, you're listening. So that's an important attribute, very important quality. Right. So I hope I have not missed out anything in the chat box, because it just scrolls up. So okay, I appeared for the mock test and managed to score an exemption in both, but still worry never goes. Okay, so yes, thank you for the lectures, right? So rather, it's the other way around now. Okay, I thank you for giving me so much of your precious time, for making it a point that you come and attend these sessions. Okay, right? So just a few months away from becoming a chartered accountant, right? Counting days and weeks for that, and all your dreams and the rest 40 years of your life, professional life, how they would be spent, and how you would be having financial abundance and prosperity in your life, or how you become successful in your career or as a professional, that would be determined based on the last few days, because whatever efforts have been put, if in those exam hall, if I do any gadbad, if I do any mistake in the exam hall, I become nervous, butterflies or mouse and rats come in the stomach, and something goes wrong anywhere. Oh, no, no, no. Then so it will be a big problem. Okay, so you have to be very careful. Okay, right? So in Caro, we write Roman numbers, right? So in Caro, we write down the Roman numbers, okay, and 2.5-day strategy. So that is what you do, the standards, you look into the yes, you look into few of the clauses and 4 chapters. Next day again, you look into the standards, the chapters, 4 chapters, and few of the clauses over there. Okay, right? So one session after exam of SFM. So yeah, planning to conduct one, but not committing you right now. But yeah, certainly having a plan. Okay, and how to write essays, how to revise essays before the exam. So you have to look into, you can go from the question bank approach. You look what type of questions have come from this particular essay, and then accordingly you study the theory in the chapter. Right, accordingly you study the theory in the chapter. Right, so are we good? Right, all great over there? Yes, so very soon you will convey to me about your successful results, that you attended the class, and then you attended the revision series, and then you cleared the exams, and now you're using the prefix CA before your name, right? And again, I don't know, but it is a need of the day, so it's like you can always guide your friends regarding which is the appropriate faculty to do the study of the subject of audit. So it doesn't mean that you put my name over there. Yes, anything which you think will be beneficial, you'll do good to your fellow friends, right? You can accordingly pass on the recommendation. Okay, so with that, I call it off from here, and thank you so much, and wish you all the very best, right? So enjoy your studies, enjoy this process. Your student life is about to get over. Yes, you're entering into the professional world. Bye bye.